All right, thank you very much. And it is great to be back here. I came along in March and spoke a little bit about the mid-register, which is probably the most important part of the ASX or LSE register for any listed company. We're going to touch a little bit about that today, as well as get into some other things around how do we actually engage with those investors and why should we? How do we think about them? Quickly about me, so I've been in M&A and capital markets for 15 years, worked on a lot of raises, both private equity and listed. I'm not a broker, I am not a corporate advisor, not in IR, we're a tech play, and if we want to talk a little bit about InvestorHub, InvestorHub is used by more than 200 ASX or LSE listed companies. It is a single product, a single platform for them to engage with investors, no matter how big they are, no matter where they're located, and it really helps, as we'll talk about, to add scale to what you're here for, right? We're here at Ignite to meet with companies on a one-on-one basis, to drive that connection, to drive a better understanding and a deeper understanding, and companies are here to do the same thing with their shareholder base. And that works really, really well when you can get in front of someone, when you can spend that time. But it doesn't work really outside of that. And that's what InvestorHub solves. As I said, last time we looked at investors by size, and that's one of the things that we're going to look at today. But we've actually got 3 different ways for companies to look at their shareholder base and for investors to understand where they sit on that base as well. So the first way we look at investors on a registry is by size. The easiest way to do that is by the number of people in each group. So the 3 groups we've got here are institutional investors, or the top 20, the mid-register, so that's really your high net worth family office style investors, and then retail, mum and dad investors. Top 20, small percentage, very few people. Mid-register is about 5 to 10% of the register, retail more than 90%. If we look at how much stock each group has, this is where the normal analysis sort of stops. Top 20 investors on average hold 45% of all stock held, mid-register hold 40%, and retail hold 15%, right? So if you're looking at this, you would just focus on that first group. You hear a lot of companies talking about this, talking about concentrating on their top 20 because they own so much, and that's really important. You do want to do that. The last cut of this information, though, is how much do these different groups buy on market, right? On-market purchasing is what really drives the share price, and that's what we have started to uncover. So if you look at percentage bought on market, you'll see that institutions are actually the smallest part. They're 20%. A lot of their purchases are off market, which is obviously important, and that helps fund the business. But the mid-register accounts for more than 50% of all stock bought on market, and retail about 30% of all stock bought on market. So yes, you want to keep those one-on-one relationships with the institutional investors, but you also want to work out how to drive that same experience that you're seeing here with the rest of the market. The second way we look at investing is by what stage of journey. A lot of people here are meeting companies for the first time, right? You're a lead, you're new to it, and once you buy stock, you will be a newcomer. So 21% of all stock bought on the ASX is new investors entering for the first time, and that's the stock that they buy in the first 3 months of being a shareholder. Next, you have your existing shareholders. So people who have already been a shareholder and have been for a little while still account for 63% of all stock, which is huge, right? 6 out of 10 shares bought are existing shareholders buying more. And the last one, which is a little bit surprising usually, is old shareholders coming back. So that accounts for 16%. So those last 2 groups together account for 79% of all stock bought. So any company has a register, they've got a list of interested people, and nearly 80% of the stock bought is those people buying more. The final stage, and after we go through this, I'll do a little recap and a quick example of how to add that scale. But the final stage is really are those investors engaged? And does the company actually have a direct level of influence with investors? You'll see here all these one-on-one meetings. You've got engaged investors with a direct relationship now with the company, which is fantastic. But as we break this down, we've got the top left quadrant, which is the followers, right? So these are people who are engaged, but it's indirect. So they might follow social media or forums, or they might be clients of a broker. So the company would pitch to the brokerage would pitch to the investors. They're still engaged, but it's through a third party. Down the bottom of right, we've got the sleepers. These are the people that you do have a direct relationship with, but they're just not listening, right? They're not engaged. We obviously want to change that. Bottom left, the strangers. They're unknown and they're not engaged. And finally, the quadrant that you want to get to are the golden investors. These are the people that you can reach and they do engage with you. It's super, super important to try and get as many of your investors into that quadrant as possible because they're very, very valuable. The reasons that they're golden are threefold. They buy more stock, right? So engaged investors, where you have a direct relationship, upgrade 40% more often than those that don't. That's a lot more purchasing on market. If they do leave, if they do become churn, they come back 80% more frequently. So they're returning shareholders at a much higher rate, which means you haven't lost them even once they've sold. And the final bit is funding. So when you're looking at shareholder offers, when you're looking at that level of engagement, this group participates 3 times more frequently. It's about 12% versus 4%. It's a huge, huge difference. So as a quick recap, the reason that we want to go direct is because these people are the ones driving the share price and they're doing it in a very different way, right? They're engaging online, they're engaging remotely because they're a lot smaller individually investors, but collectively they're much larger. As we remember, 80% of all on-market buying occurs outside of the top 20. 79% of all on-market buying is existing or prior shareholders buying back in. Right? So these are people you've already sold to, you've already earned the relationship. You just need to build that relationship at scale. That's literally what we built our product for, is about adding that scale to one-on-one conversations like you're having today. As I said, we work with more than 200 ASX or LSE listed clients, and it's about bringing together, it's about 7 different products into the one platform that allows for that to happen seamlessly. One of the companies here today, so we've got, I think it's 8 clients here at Ignite today. I haven't mentioned who they are, and so I've just put a little photo of us instead. But one of them here had some news semi-recently, and they added a 5-minute video to their ASX release. That 5-minute video obviously takes a little bit longer than 5 minutes to put together. It took them about half an hour all in. And by adding that and distributing it easily, it allowed for 1,200 unique investors to come through to their website and watch that video. Those 1,200 unique people visited a total of 1,800 times and watched for more than 120 hours that content, engaged with it for a much longer time. So 5-minute video, took half an hour, ended up giving them a 240 times return on their time, right? So you're not spending half an hour one-on-one with one investor, but you're spending half an hour engaging with 1,200 instead. So the takeaways are pretty easy. D to I is very proven. It's literally why we're all here, right? You're here as investors to directly meet with companies and companies to directly meet with investors. It's just about adding scale. We've proven that. We've proven it across multiple jurisdictions and with more than 200 companies. It's very, very easy to add that repeatable reach to work in with existing workflows. And very much importantly, it's fun to do. So thank you very much. I'll be around for both days of the conference. And if you've got any questions, please come and see me. Cheers.